Good evening. Welcome to yet another session on technical analysis for profits. I'm Raja Venkatraman out here, and I'm glad to welcome you all for this webinar. Before we proceed, can you all tell me whether the audio and the video feed is in order so that I can proceed with the webinar? Okay, I've got confirmation from most of the participants. So let's get going. Okay, today's topic is patterns for profits. Why we have chosen this topic is because sometimes in our trading and investing journey, we tend to forget the basic nuances of technical analysis. Some of you are already practicing this fascinating subject, and some of you are new to this ever growing subject of technical analysis. So, we thought that this would be a good time to share with you how patterns emerge in the market, and everything about market is geometric and it keeps forming various kinds of patterns. There are many authors who have commented on various types of formations, and today we'll select three formations. I'll explain to you how is that pattern formed, how is it relevant, how to read it, and then at the end of the session, we'll have some live examples and we'll have an interactive one where I'll help you identify those patterns so that you have a good takeaway at the end of the webinar. So, before we proceed, some of you are new to Growth Avenues. Growth Avenues is a company founded by Dr. Narayan, and as we all know, he's been there in the market for more. Everyone knows that he's there. He's been there in the market for a long time. But do you really know that he's been there in the market for more than 50% of the ages of all the people out there? He's been there in the market for more than 37 years. And I'm sure that 50% of the audience are less than 37 years. So that is the amount of time he has spent in the market. And at Growth Avenues, he continues to ensure that we are pioneering new products, we are coming out with innovative products, and we are ensuring that we give our customers value for money. Mind you, technical analysis of profits is the only webinar which is conducted in India where for free you get to learn something. We all know nothing comes for free, but hold on. At Growth Avenues, we definitely give something for free. That is our time and our knowledge. I'm with Dr. Narayan for more than 10 years, and over the 10 years, I have learned that technical analysis is the most powerful tool to analyze the markets. So, those of you out there who are sitting on the bench wondering whether this is a subject to pursue, don't think twice. Okay, so what has Growth Avenues to offer? Growth Avenues offers variety of services. First among that is the training and certification for traders and for training for corporates. If you don't want to get trained, then if you are an HNI, then we also have advisory services for the HNI. And if you do not want advice either, then you can definitely participate in our discretionary fund management, which is handled by Dr. Narayan. Over the last 37 years, he has devised various interesting methods using different sub concepts of technical analysis, and he deploys them to manage the funds. So, Growth Avenues is not just only about training, it's about the discretionary fund management as well as attending to HNIs and big corporate customers. So, whatever be your suite of services you require, everything is available at Growth Avenues. So, let's get started. Before we get into the concept of pattern, where do you think the market exists? Does it exist in the stock exchange, the BSE Rotunda building, or is it there in front of a screen? Few people who keep staring at it all day, and some of those, and few of us who do not have access to live terminals, now we have the convenience of technology. We have the app. We continuously look at our mobile, stare at our mobile to see whether the share which you have bought is going up or the share which you have sold is going down, or is it existing with your brokers. So what exactly is stock market? Where does it exist? It exists nowhere but in your mind, because in the stock market there are only three ways you can participate. You can either buy a security, you can either sell a security, or you can either hold. Mind you, holding is also a way of participating in the market, because you choose not to sell your stock or not buy the stock on the way down. So before we get into the concept of patterns, we need to understand how exactly the market functions and why exactly is there a need to understand chart patterns. Because stock market is not a unified structure. It's a collection of companies who come together to present their view and their performance, and we take a view on them based on the performance they declare, like every quarterly results, where we get to know about how the company has performed, or certain corporate actions which tell the actions which are going on in the company, the events which are going to take place, and the kind of thoughts which we assign to this particular type of action. All that is culminated into prices. But before that, we have to understand what exactly drives the market. Is it news? Is it events? Is it the fundamentals of the company? Or is it emotions? Ultimately, at the end of the day, everything boils down to emotion, because everything boils down to the prices, and prices represent the kind of emotions which are there in the market. Okay, let's take the example of Nifty. It was coasting along at 8400, and suddenly the global cues kicked in, the pressure stepped in, and the accelerated decline saw everyone giving away their stocks, saw everyone entering into the bearish mode. What was all this? All this was nothing but emotions. We look at each other, or we call our friends, we call our analyst friends, or we call our broker, and then you can see here this was the 8400 zone, and soon we cascaded down into the 7600 zone. A sharp decline addressed by these various kinds of emotions which we have gone through. Some of you may have exited at denial, some of you might have exited at desperation, and some of you might have capitulated. And now, eventually, when you decided to go short, the market is going the other way. So, how to address all this? How is it possible to know whether we are on the right side of the trend or on the wrong side of the trend? Well, we can look at each other and find out what are we going through to some extent. But how do charts tell us? Chart tells us through patterns. Charts medium of communication are patterns, and that's why it is very essential to know chart patterns, so that you're able to interpret the market movement and you're able to understand what exactly the market is expected to do. We all must know that technical analysis deals with probability and not certainty. So, whatever patterns are represented, it is based on various, it is based on historical performances of that particular pattern, and over a period of time it has been found that that particular pattern gives you the expected result. So that's why that particular pattern has become famous and been deployed by many technical analysts across the globe. And for chart patterns, we should know what exactly are charts. Charts are an illustration of the struggle between the buyers and the sellers. At 8400, the buyers were in control, and as prices started declining, bulls started giving up hope, and eventually below 8000, the sellers took over. So chart patterns, they tell you what exactly is the intended direction of the market and how you could profit from participation. Mind you, all this is focused on one thing: participation. And if you want to profit from market, you have to participate. Without participation, there is no there is no use of doing technical analysis. Technical analysis for profits is focused on enabling your basic understanding of technical analysis subject and ensuring that you participate in the market and profit from it. That's why actually we have named it technical analysis for profits. Otherwise, we could have named it as technical analysis for knowledge or for learning. But why did we focus on profits? Because that is the main thing which we want from the market, right? We do not want to go to the market from 9:15 to 3:30 and just stare at the screen or wonder whether I should have bought the stock or sold the stock. But all this can be rectified if you start analyzing the markets better. And for analyzing the markets, knowledge of chart patterns are very, very critical. So let's go and understand what are the patterns which we have in store for today. Before we go into that, we must know that there are three types of patterns. And patterns are categorized into three different types. One is a continuation pattern. The second is a reversal pattern. And the third are candlesticks pattern. So these are three types or classifications of pattern which will help you understand what is the price going to do. Let's get started with continuation pattern. Continuation pattern, by the name itself, it suggests that the prices are going to go along the intended direction. By intended, I mean if the pattern is indicating that prices are going to head lower, so there are high chances of the prices heading lower. In the same way, if the pattern is indicating that the prices are going to now continue its ascent, then the prices will continue to go higher. Some patterns in which fall under this category are the cup and handle pattern, the flag pattern, the pennant, symmetrical triangle, ascending triangle, etc. So today we will be checking out how does the flag pattern work. This flag is a very interesting pattern and it occurs many times in the intraday setup as well as on the daily setup. So all traders out there should definitely watch out for a flag movement. Flag, as its name suggests, there is a rapid move to the upside in case of a bull flag. You see here that there is a rapid move to the upside and then the price begins to consolidate at the higher level itself and then eventually give a breakout. So what happens is, as the price gives you a breakout, the the profit potential is the length of this pole. This is shaped like a flag. This particular red and green line is shaped like a flag, and from here you get a breakout, and you get the height of the pole. Same way on the way down, the congestion area normally it is shaped like a flag, and then eventually the prices head lower, and you can take this pole as the price objective. You can see here, you can see this flag, and this is the pole, and from the breakout point you can take the height of the pole. It meets the intended target, and then out here you can see a flag out there. There's a breakdown, there's a breakout point, and then you can see the breakout which is emerging towards the intended target. So you can see that this is the pole, this area is the flag, and this is the projected target. Any questions so far? I'll just take a breather in case anyone has any questions on how to understand the bullish flag. Okay, now this is on the way down. You can see here that this is a particular pole, and then this parallel lines are the flag pattern. Ideally there should be 2 to 8 bars and not more for the formation of the parallelogram, which comes out here, and then there's a breakdown which meets the intended target. And here again you can see there's a 8 bar movement, and again there's a projected down. So you can see that flag is a very interesting pattern. This I have shown you on daily, and in intraday too it keeps forming, and it gives us fantastic opportunities to trade. So how do we profit from market, and how do we profit using technical analysis? That's what we cover in our comprehensive technical analysis webcast. This webcast is a recorded technical analysis program by Dr. Narayan, and we have introduced it from this year, wherein we have a time window concept where from January 1st to March 31st the new time window has opened, where you get to see the videos of CTA, which is our comprehensive technical analysis, for unlimited number of times. You have lifetime support through email, where we'll solve your queries, give you examples, and enable your understanding to a much greater level. You have a live webinar session with Dr. Narayan, where he will discuss with you on how to put together all the concepts of technical analysis and ensure that you are able to read the market in a much better way. Then you have 2 support webinars where, like this, we will be discussing each aspects of technical analysis with examples so that your understanding gets resolved, and any queries, if any, that shall be addressed. And if anyone from the program have sent examples, that shall be discussed to enhance your level of understanding. So that's what our CTA webcast is all about. And this is the course coverage. Technical analysis has many subjects. Technical analysis has many patterns. Technical analysis has many oscillators, whatever you can say, patterns, tools, etc. But what you need to know is that what is the required amount of knowledge to be gained so that you are on the path to making profits. And that's what Dr. Narayan has done in this webinar. He has put together a fantastic composition of why you need technical analysis, what is technical analysis, how it should be interpreted, and how it is to be applied. So these four aspects are covered by Dr. Narayan in detail in this 25-hour webcast. I'm guaranteeing you that nowhere in India today you will be getting a detailed technical analysis program. You'll have a technical analysis program. I do not deny it, but you'll have to see what value you derive from it. Do you derive a value just to see the chart, or does it generate confidence in you to actually go out there and participate in the market? I am harping on the word participate because market gives you money only from participation. If you want to sit around and stare at the screen, market is not going to reward you. Market is going to reward only people who participate. So that's what technical and CTA program does for people who are wanting to know more about the subject. They get to know about the subject, and for people who are yet to learn what is technical analysis, it gives them a great amount of detail. We have a basic introduction to technical analysis and why prices are the ultimate resolution point for any action in the market is discussed in detail, and the entire build up is discussed. The Dow theory is interpreted in fair amount of detail. The important role of support resistance is discussed. What are the various types of candlestick patterns which are relevant to the understanding of this subject? Then the traditional patterns are discussed. What are the line studies, different types of line studies, channel, pitchfork, how to use the mathematical relationships in the prices, study Fibonacci, that is discussed, how to use moving averages, and how to use oscillators, because oscillators is a construct of the prices. It is the other key part which one ignores while doing technical analysis, but I'm re-emphasizing the fact that understanding oscillators is very critical, and this is very brilliantly covered in our CTA program. And ultimately, combining all this, we have put together a framework which will help you to understand technical analysis and apply it. Ultimately, at the end of the day, like I said, application of technical analysis is critical to the whole thing. So, what do we have for you? We have a structured approach to technical analysis and not just teaching you any random stuff, because it is done by Dr. Narayan, who has spent more than 37 years in the market and more than 20 years teaching more than 50,000 students. Mind you, he has been there on the board of UTI Institute of Capital Markets, which is now NISM. He's been there on the board of BSc Training Institute. He is the founder of the technical analysis course at BSc Training Institute, and he has trained there for more than 8 years. And right now, he is handling his training programs at Growth Avenues, where he did classroom sessions for more than 5 years, and now we have recorded this unique webcast. So, what does this webcast give you? It gives you a clarity of purpose, it gives you a clarity of vision, it helps you see the market in a better light. And what does this program will do to you? This program will give you a structure where it will help you to analyze the markets forever. That is the beauty of technical analysis, isn't it? It helps you read the markets irrespective of the asset class. Unlike if you are doing fundamentals, you'll have to know more in detail about that particular company or about that particular asset class, which makes it very, very difficult. But technical analysis, once you learn it the way it has to be learned, then you can ensure that you're on the path to profits. Why is Growth Avenues webinar better? It's a value for money. We have fantastic technical support. We have a live chat system where we answer your queries, and we offer you value addition in terms of the price as well as the support as well as lifetime email support. And at the end of the day, it's an investment which will give you much more than you bargained for. So I've given you a fair idea of what the CTA webinar does and how it will be beneficial. The webcast is priced at 17,000, and more patterns like these are discussed. More concepts of what all I illustrated are discussed in fair amount of detail. What I share in the in the technical analysis for profits are nuggets from those, but they are not the complete thing. For the complete thing, you have to come and learn from the master, Dr. C.K. Narayan. Okay, so now we have seen a continuation pattern. What does continuation pattern say? Continuation pattern tells us that the trend which was in force will continue further. Now it's the other way around. It says that the trend which was in force has now come to an end. So that's what is the meaning of reversal pattern. Reversal pattern are patterns that tell us that it's about time that this particular trend has come to an end. So we should either book profits or trail or stop. So it gives us a fair amount of idea on what needs to be done so that market doesn't take us by surprise. So what are the various kinds of reversal patterns which we have? We have a double top and double bottom. We have a triple top and triple bottom. We have head and shoulders. We have rising and falling wedges, and the lesser known rounded tops and rounded bottoms. So in this webinar, I shall be talking to you about two kinds of reversal patterns. The first one is a double top. The double top, the name itself gives you some idea on what could it be, but it is just not the formation of a double top. It is how you read it is more important. You can see here that there are two, one and two new, it's numbered, the two peaks are numbered. Double top is a bearish trend. It says that the high which was formed recently has appeared again, and the prices are now coming down. So in this case, you can see here that the price has made the first peak, then it's coming back to make a second peak, and then it's declining. In a double top, one needs to note the formation of a neckline, because the neckline is what is holding the prices, and once the neckline fails, it will trigger the reversal pattern. The pattern is not triggered out here. The pattern is triggered on the break of this neckline. We can marry it with the volumes, and then you will know that if the volume is actually is lower than the second peak, then it adds to the speed of the decline. So let's go forward and see some examples now. You can see here the chart of Reliance Capital. This is the first peak, and then this is the second one, and the red line, which is the neckline, was holding the prices. You can see, for those who know technical analysis, you can see that there are shadows appearing around this neckline, so actually holding the prices, and eventually the prices collapsed. So the target for a double top is from the peak to the neckline. This is the price objective, and the price objective of 20 points is met during this fall. So interesting, isn't it? We have to keep our eyes open, and you shall soon start identifying patterns which are emerging. This works on intraday as well, but the veracity is much lower. Now we move to the double bottom. It's completely reverse of what we discussed in the double top. It is on the way down. Similarly, you need to wait for the neckline to be surpassed. That's when you can start interpreting it as a double bottom formation, which is now triggered, and you can take the height from the neckline to the low of this trough as the target and project it outward. Any questions so far? Here again, the volumes are significant. If the volume on the second trough is lower than the first one, it's preferable, but it's not mandatory. Let's go on to some examples now. You see here, this is a chart of Apollo Hospital. We are having a double bottom formation here. Mind you, it did not be a perfect V. It is not possible to have a perfect V, but if it's more or less in this direction or more or less in that region, you can see here, it's more or less in that region, and from here this neckline was held, and the price went ahead and met the price objective. This is a double bottom formation. So we have seen a reversal patterns. We have seen what are reversal patterns. We have seen what are continuation patterns, and then the other kind of pattern, which is popularly known as candlestick patterns, is the third kind of pattern which we will be seeing now. Candlestick patterns are very popular because now of its wide usage in the Western world, and its continued preference on the for the from the software providers who provide that as a default setting. So normally when we all look at our chart either on our terminals or on your software like Metastock, IME Broker, Advanced Gate, Dynamic Trader, etc., you all will see candlestick pattern by default because our eyes are now the default setting of our eyes are now candlestick patterns. Candlestick patterns are bullish or bearish, and every pattern is defined with a particular name. They have names like Harami, Hanging Man, Hammer, Doji, Tweezer, Three White Soldiers, etc. And these patterns are having a war terminology because it was formed in Japan, where at that point in time, when this terminology, when the subject was evolving, Japan was going through some period of crisis, and hence it started. These kind of terminologies were adopted by them. Okay, so what do we have for today from candlestick pattern? We have taken Doji. Doji is a very interesting chart pattern because it has got many variants, and Doji represents the classic case of what our market goes through is uncertainty. So Doji indicates uncertainty, and that uncertainty can trigger either a buy or a sell. So it's important for us to know the Doji pattern amongst all the types of candlestick patterns because it gives you it gives you good identification of what can happen at that point in time. And the most important thing in Doji is that it has to appear at the right spot. In the sense, a Doji at the support indicates that the prices have been declining for a while, and if a Doji appears, it says that the sellers might be now thinking twice about selling. So we should now reconsider rather going short and maybe switch the bias. So that's the benefit of Doji. Doji at a high indicates vice versa. Maybe we are bought enough, so maybe we should now take a break. So that's the advantage which Doji gives you, and it's a good trend reversal pattern which we can use as part of the candlestick patterns family. You can see here there's a Doji which I have highlighted, but there is one more Doji out here which says that the prices are not interested to move higher. Again, there's a Doji here, and there is another Doji here. So it eventually it's saying that the prices are not interested to move higher, and it is arresting any possible attempt to go high. So at this point in time, one should reconsider going long, and if long, should be looking at revising the stop loss, or even better, book profit and await for a rebuy or buy on declines. Any questions so far? Okay, I think I seem to be getting through with everyone. And this is another interesting concept which I would like to share with you. It is called the trading journal. We all know how important it is to participate in the market. But along with the participation, it is also important to have a log for those who want to move ahead in the area of trading and want to make trading their living. Then I would recommend you to take a look at the trading journal. It's a trading journal which is designed by Dr. Narayan, which gives you highlights on how your performance has been. It has quotes from all the famous traders, and this trading journal is mainly aimed to give you a peek into what kind of trading you follow, what is your trading style, what are the steps required to improve, how have you fared in the last month, and what are the steps you're taking for the next month. And the benefit and the way it is designed is that it is not a dated journal. You can use one journal for even 3 years or 4 years or 5 years. It's up to you. But if you're a regular trader, then you can have your stocks, your methods, where you enter the trade, what kind of risk. Ultimately, market is about how you address the risk. And if you address the risk at all points in time, then you can be sure of making money most of the time. If you need to be profitable, You should not be looking at a day or a month. You should be looking at how are you making profit year after year. And that's what will happen if you apply technical analysis in the right manner. And see here, this trading journal is designed to give you a complete detail on how you want to participate, how, and what are the various ways in which you can assess your performance. In school, we all had a report card, right? But as we grow up, there is no report card, nor anybody asks you how you perform, because you either are salaried or you're in business. And if you're in business, your returns are your balance sheet. Otherwise, if you're salaried, even better, you just draw a salary and you move around. But what happens in the market? In the market, you make money, you lose money, you make money, you lose money, but ultimately you need to assess yourself. And that's what this trading journal does. This trading journal is priced at a modest price of 400. You can contact our office and get more details on this fascinating book. With that, I come to an end of this webinar, and now I am opening the floor for any discussion on all the patterns which have been discussed. If there is any query, I'll be happy to address it. Yeah, thank you.